All right, this is Demetrius Wilson again. This is chapter 3. This is part 2 of the lecture. As I left off, I was just indicating that if you take the $5,020,000 of allocated overhead to the basic sailboat and you divide that by the 5,000 units produced, you get $1,004 overhead cost per unit. And if you take the $2,980 dollars allocated to overhead for the deluxe sailboat and divide that by the 1,000 units that were produced, you get 2,090 per overhead cost per unit for each of the products. Alright, so how is the product cost determined using activity-based costing? The product cost calculation at SailRight is shown below. Notice that the direct material and direct labor costs do not change when using activity-based costing. So the direct materials, they're $1,000 for basic, $1,300 for deluxe sailboat. We spoke about the reasons why the deluxe would have higher costs. Direct labor $600, $750 for the deluxe, 1,004 for the basic sailboat and overhead, and 2,980 for the deluxe. Total product cost per unit 2,604 for the basic sailboat and 5,030 for the deluxe sailboat. Obviously, it takes a lot more to create that deluxe sailboat. So the question that you may ask is, why would they have the same overhead rate? So how do the product costs per unit differ when using and comparing activity-based costing with the plant-wide approach? Well, plant-wide approach, you see that for the basic sailboat, you're going to take your profit, right? So what you're saying is that you're taking the total cost per unit 2,880, and you're subtracting that from the sales price, which is 3,200, and you get $320 profit. On a deluxe sailboat, you have $3,650 in expenses and $4,500 is the sales price, so you have $850 in profit. But that's when you use plant-wide. When you go down here and use activity-based costing, you're saying that the total cost is 2,604. Subtract that from the 3,200 in the sales price, your profit is 596. So that profit's a lot higher than that 320. And then if you take the 4,500 sales price, you realize that $5,030 to create the deluxe sailboat is, you're losing money on that, and you're losing $530 each one. And that happens a lot of times, just to give you some real world background. A lot of times that actually happens because companies say, hey, we're good at making this basic sailboat, we should be good at making this deluxe sailboat, but that's not always the case. And then, clients, sometimes they have needs and they ask for it and you don't want to lose them as a client. So you say, we'll start doing this, but you may not be able to do it as efficient as you've done it with your other products. So what are the advantages of using activity-based costing? You have more accurate cost information, which leads to better decisions, right? So if I were to go back to that, knowing this leads to better decisions. Increased knowledge of production activities leads to process improvements and reduced costs, and that's what we want to do is in business and utilize managerial accounting to do, is to improve processes and reduce our costs. So what are the disadvantages of activity-based costing? The system can be costly to implement. It costs a lot of money. It takes some time to do so. Unitizing fixed costs can be misleading, and the benefits may not outweigh the cost. So, if it costs more than the benefit, then you probably shouldn't do it. So how are overhead costs recorded when using activity-based costing? We presented the flow of costs for job costing system in Chapter 2, assuming a plant-wide approach was used. The cost flows are the same for activity-based costing, except several rates were used to calculate overhead applied rather than just one plant-wide rate, right? So the only difference is that use 1 versus use 3. Once the overhead amount is calculated using several rates, the entry is the same as the entry presented in Chapter 2, and it's there with the work in progress or process inventory and the manufacturing overhead. So here's a recap of all the allocation methods. You have the plant-wide right there, entire plant, 8 million. So just remember, all of them are going to add up to 8 million. Departmental allocation, so whole fabrication department, 3 million there. Assembly department, 5 million there. Activity-based costing pool, so you see 1,500 for assembly, 1 million to inspect finished products, 1,200,000 to purchase materials, $1,600,000 to set up, and then $2,700,000 for running the machines. All that add up to $8 million. So you want to understand the concept of activity-based management. All right. So just like activity-based costing, activity-based management has some great features. So what are the three steps associated with activity-based management? Identify activities required to complete the products. Determine whether activities are value-added and non-value-added. If they're not value-added, then you want to look to minimize or eliminate them. If they are value-added, then you want to focus on them. And step three, continuously improve the value-added activities and minimize or eliminate the non-value-added activities. So why do organizations use activity-based management? To analyze processes, to improve efficiency of operations, and to improve profitability of operations. That's why managers use this information from accounting to make improvements. So some people think it's just numbers, but no, you take these numbers, you use it to make things more efficient. Apply activity-based costing and activity-based management to service organizations. So as I always tell you, we'll go over a lot of manufacturing, then we'll go into service a little bit in these chapters. So how can activity-based costing help service organizations get better product cost information? The same five activity-based costing steps are used in service organizations. So direct labor costs tend to be significant, right? That means the money that you're paying the people that work for you. And direct material costs tend to be minimal. So examples of activity-based costing and activity-based management in service organization include allocating overhead costs to things such as loan products at a bank, tax and consulting services at an accounting firm, and individual and corporate projects at a law firm. So you want to expand the use of activity-based costing. So how might activity-based costing be used to help companies in areas other than external reporting? So activity-based costing can be expanded to include costs beyond manufacturing overhead, such as selling, general, and administrative costs. And all companies have that. Remember, selling is going to be marketing and sales, money that you've applied towards that, and general and administrative is going to be things like human resources. Costs can be organized in different ways to help managers evaluate performance. So for external reporting, you must follow the generally accepted accounting principle rules. For allocating and reporting costs. So for internal reporting, though, which is different, you have managers that have the ultimate control over which costs should be allocated. The goal is to provide cost data and helps the managers make better decisions, and that's the key to managerial accounting. So you'll see the little chart right there. So what examples of what examples of costs that can be allocated to products for internal reporting purposes? If you see down this line, yes, to allocate to products for internal reporting, it's all yes because this is the managerial accounting side. But if you look over here on the generally accepted accounting principles, you'll see that. That you only have yes for direct materials, labor, and manufacturing overhead. Everything else is no because you're not allowed to apply that to a product for outward reporting. So what is the difference between service department and production departments? Service departments provide services to other departments within the company, right? So HR provides a service, IT provides a service, and includes such functions as accounting, human resources, legal maintenance, and computer support. So production departments are directly involved with producing goods or providing services to customers and include such functions as ordering materials, assembling products, and performing quality inspections, right? So you need that, and in a few slides later we'll show you why that's very important. So why are service departments costs sometimes allocated to production departments? The services provided by the service departments are not free and should be used efficiently, right? So IT resources are not free, typically around about $100 per billable hour, so you have to use them efficiently. Companies make outsourcing decisions based on the cost and quality of the services provided by the service departments in areas such as maintenance and legal support. And organizations often include service department costs when determining product costs for internal decision-making processes or purposes. So why is the direct method often used to allocate service department costs to production departments? Because it's directly applied. It is the simplest method to allocate service department costs. The direct method allocates service department costs directly to production departments, but not to the other service departments. Costs are allocated using allocation system that drives the department cost, that cost driver. So what's the hierarchy of costs and why do managers use it? Costs are grouped into four categories to help managers from a cost pool of activity-based costing. The cost hierarchy groups are facility level, which will give you detail on all these, product or customer level, batch level, and unit level. So what is the facility level activity? Facility level activity are required to sustain facility operations. You have to keep the lights on. Costs associated with these activities change over long time horizons, and facility level costs are incurred regardless of how many product, batch, or unit level activities take place. So no matter what, you have to pay to keep the lights on. You have to pay insurance. You have to pay insurance on your car no matter how many trips you take up and down the street. Examples are building rent and management of the factory. So what is the product level activity? Product level activities are required to develop, produce, and sell specific types of products. Costs for these activities change over a shorter time horizon than facility level activities. Product level costs are incurred regardless of the number of batches run or the units produced. An example is product development and product advertising, right? So you put your product advertising out, it doesn't change in direct relation to how many products you sell, right? The amount that you allocate towards your advertising budget and marketing budget remains the same. So what is batch level activity? Batch level activity activities are required to produce batches of products. Costs for these activities change over a shorter time horizon. Batch level costs are driven by the number of batches ran rather than the number of units for each batch. An example would be machine setups or quality inspections. What is a unit level activity? Unit level activities are required to produce individual units of product. Costs for these activities change over a short period of time. Unit level costs are driven by the number of units produced. An example, obvious, direct labor and direct materials. More units, they need more labor to produce the units, and you need more materials to produce those units. And so here's a level, you can check that out on your own, that shows facility level. You see plant depreciation, that's a good example of building rent. Product level, new product development, product engineering. Batch level, machine setups. And unit level is a direct labor, direct materials, and energy to run production machines. So how can costs be organized to assess the cost of quality? So quality related costs can be organized into four categories: prevention costs, appraisal costs, internal failure costs, and external failure costs. And I know we're towards the end of very long PowerPoint presentation, but these are very, very important, and let me explain why. So each of these four categories is defined as follows. So prevention costs, costs of activities that prevent defects in products such as quality training and raw materials inspections. So we're going to prevent anything bad from happening, which is best and is ideal. Appraisal cost is a cost of activities that detect defective products before they are delivered to customers, such as finished good inspections and field inspections. Well, it is still a loss because we finished a good, we inspected it, we scrapped it, and it's still a cost to us even though it didn't hit the floor, and it saves, bad reputation on the marketplace. And then internal failure costs is cost of activities that result from detecting defective products before they are delivered to customers, such as rework and scrap. And then external failure, and this is the very worst, cost of activities that result from delivering defective products to customers, such as warranty repairs and warranty replacements. And last but not least, how do managers use the cost of quality to improve operations? So companies that measure these costs typically calculate the cost in each category as a percent of total revenue. The goal is to steadily shift costs towards the prevention and appraisal categories, right? Because this is done up front, and away from the internal failure categories, because that means it's going to cost us some money. Product quality improves and total quality costs decrease when the focus is on preventing defects. And I'll read that again. Product quality improves and total quality costs decrease when the focus is on prevention. Right, so an ounce of prevention is worth a pound of cure, as they always say. So make sure that you complete your quiz this week, and we'll move on to chapter 4 next week. Hope you have a good day and definitely a great week.